Good afternoon, students. Very good afternoon to all of you. Welcome to the session. Welcome to the session, CA Roshan Bajaj, sir. Welcome, sir, and good afternoon, sir.
Good afternoon, sir. Good afternoon.
Students, we have with us CA Roshan Bajaj ji for third lecture, third session on substantive testing. He has got, as you all are aware, 19 plus years of experience, professional experience, and out of which 7 years of Big Four experience, and he has got uh, uh, experience in diverse sectors, and he is also regular faculty for C&AG training programs. Students, आप जितना भी मैं कहूँगा फायदा उठाएं उतना कम है और बार बार लेक्चर को देखें। अभी मैं सर से डिस्कस कर रहा था, देखो पहले लेक्चर में सर ने आपको कंसेप्चुअल फ्रेमवर्क बताया है और तो पूरा कंसेप्ट्स आपको ब्रीफ किए हैं सब्सटेंटिव टेस्टिंग के। और सेकेंड लेक्चर में सर आपने ब्रॉडली क्या कवर किया था? सर यू आर ऑन।
So, how do we do substantive procedures
How do you
that
do?
we discussed?
तो सेकेंड लेक्चर में स्टूडेंट्स कैसे उसे करें, एग्जीक्यूट कैसे करें, प्रोसीजर्स सारे, प्लांट एंड मशीनरी है, फिक्स्ड सेट्स है, उनका कैसे करना है, देन इन्वेंट्री का, तो बहुत सारे सर ने विद द हेल्प ऑफ केस स्टडीज भी आपको सारी बातें समझाई। और स्टूडेंट्स, ये एक अपॉर्चुनिटी है, मैं आपको हमेशा शुरू से ये बोल रहा हूँ कि ये लेक्चर्स अटेंड करना, इतने हाई क्लास प्रोफेशनल्स जो कि अपने फील्ड के अंदर टॉप पोजीशंस पर हैं, वो आपको गाइड कर रहे हैं, वो आपको समझा रहे हैं, तो ये एक अपॉर्चुनिटी है। तो आप सभी लोग इसका बेनिफिट उठाएं और अपने फ्रेंड्स को भी बताएं। मैं आपको बार बार के जितने भी आप, मेरे को मालूम है आप सब लोगों के ग्रुप्स बने हुए हैं, तो आपके कॉलेज का ग्रुप है और कोई ग्रुप है, तो उसमें आप अपने फ्रेंड्स को इन्फॉर्म जरूर करा करो ताकि सबको बेनिफिट हो सके। और स्टूडेंट्स, नेक्स्ट लेक्चर जो है हमारा वो 8th को होगा, 8 जुलाई को कंप्लीशन एंड रिव्यू पर 8 जुलाई को होगा, और 11th का लेक्चर वो पोस्टपोन हो गया है टू 13 जुलाई। तो 11th जुलाई का जो लेक्चर है कंप्लीशन एंड रिव्यू का, वो अब 13 जुलाई को हो गया है। हमने मास मेल वगैरह भी करवा दिया, तो वो आप को मैंने यहाँ पर भी अवेयर करा दिया है। अनदर इंफॉर्मेशन फॉर यू स्टूडेंट्स इज कि जो हमारा फोर्टनाइट प्रोग्राम है वो 3 जुलाई से स्टार्ट हो चुका है। तो मैं आप सबसे रिक्वेस्ट करूंगा कि जो फोर्टनाइट प्रोग्राम है, आप स्टूडेंट्स ज्यादा से ज्यादा अपने फ्रेंड्स को इन्फॉर्म करो और उसका बेनिफिट उठाओ, क्योंकि बहुत ही शॉर्ट प्रोग्राम है। 2 आवर्स में हम उसमें आपको पूरी गाइडेंस दे रहे हैं, इंपॉर्टेंट क्वेश्चंस कवर कर रहे हैं, इंपॉर्टेंट टिप्स बता रहे हैं, एग्जामिनेशन को कैसे हैंडल करना है, बहुत सारी बातें हैं स्टूडेंट्स। तो हम इकट्ठे बातें आप जो फोर्टनाइट प्रोग्राम है वो जरूर अटेंड करें। कोई भी आपको डाउट है तो मैं अपना हमेशा मोबाइल नंबर शेयर करता हूँ, 9466789298। तो ओवर टू यू सर। थैंक यू सर, एंड थैंक यू स्टूडेंट्स।
Yeah, thank you so much, Rajiv sir, for your introduction, and you have already set the tone and context of this session as well. So, dear students, very good afternoon to you all, and I'm again here for you to present on substantive procedures. So we have had planned for 3 sessions on substantive procedures. As rightly mentioned by Rajiv sir, that in the first session of substantive procedures, we covered the framework and understanding the conceptual framework of substantive procedures, as in why do we do substantive procedures, why it is required to be done. And in the second session, we understood the craft of doing substantive procedures, the tools which we use to conduct substantive procedures, whether analytical procedures or test of details, in what situations analytical procedure is more feasible, in what situations there is no option at all without doing any test of details. So all those things we covered in the second session. Today what we will do, today whatever we have learned in the past 2 sessions, that we will bring to a work paper. So what we will do, I will take you through a key process which is very prevalent process, procure to pay. So right from procurement to payment, the whole process we will cover, and we will create a workbook for that. And that workbook should be such that it should be able to pass the test of experienced auditor. As we discussed in our previous session, that every working paper should pass the test of experienced auditor, so that they are very self-explanatory, and the preparer of the working paper need not explain anything with respect to the working paper to an experienced auditor who is reviewing it. So that should be self-sufficient, that should be self-explanatory. So how to create such a working paper which captures the whole journey from risk assessment till the reporting in an audit report? That journey we will cover through a workbook, and one process we will pick. It is not possible, or it is not feasible to cover 7 8 key processes in one in a session of 2 hours. But what is most important is to understand the approach, the process which we follow in creating a working paper. Similar process you have to follow for other areas also. So that is why I thought that let's discuss one process in detail, which will give you a fair idea about how to go about it. Right? So in this particular session, what we will do in procure to payment process, we will identify few errors also. So we will identify 3 errors, and all 3 errors are different in nature. If you then, how do we understand which particular error has to be taken forward as an uncorrected misstatement, or which error we have to ignore, which error is beyond the performance maturity, which error is beyond clearly trivial threshold, which is below that, and how to comprehend with every situation which we will reach in while going through this presentation. So let me just share this slide with you, and then we will directly get into the working paper. Hope you are able to see the screen. Can someone please confirm? Okay, thank you very much. So now, as I discussed, that today is the day when we will transform theory into practical. One process end to end, we will build a complete cross-referenced working paper set for procure to pay process, and exactly it is such that how it sits in a real audit file, which is highly defensible. If at all any vigilance agency comes to us and asks us to demonstrate that whether we have done the audit properly or not, whether we have documented everything or not, so this particular audit file will have everything what is required, or what questions that may be asked by the experienced auditor. So with this background, so first, what all we will discuss in today's session, the first aspect is the procure to pay cycle and its risks. So whatever risk we have assessed in procure to pay cycle, that we will discuss. Secondly, we will link planning, risk assessment, and internal controls corresponding to that to the program, to the audit program. So how we are doing that linking right from planning to risk assessment to internal control evaluation, that we will see through this working paper. Then whole working paper shall be indexed. So we will allocate unique numbers to each working paper in this workbook. So that how we do that, that also we will see. Then lead schedule, there is a concept of lead schedule. In previous session also I had discussed it, that lead schedule is nothing but, say, a trade payable balance is reflecting in trial balance of, say, 1 crore, and in that trade payable balance there are three sub balances. One is relating to capital creditors, one is relating to uh, creditors for services, and one is relating to creditors for goods. So these three line items will be reflecting in the lead schedule, the total of which will tie with the trial balance. So that is what a lead schedule is. So definitely we will go through it. When we go through the whole working paper, you will get to see the lead schedule as well. And we will also prepare one risk assertion matrix, that which, for which risk, which assertion we need to address. So that risk assertion matrix also we will cover with respect to procure to pay process. Then next what we will cover is analytics, what analytical procedures we can conduct on the procurement to payment process, what, how do we do sampling, how we determine sample size. So that all those things we will do practically. And finally how we will do test of details, that also we will see. Along with that, we will also discuss the supplier reconciliations and confirmation process, that how we will do that, how we will capture the results of it, if certain reconciliations or confirmations have been received, how we will cater to that, and if something has not been received, what are the alternate procedures which we need to follow. We will also discuss about the cutoff testing. How do we do that? We will see a working paper with respect to that as well. And last, in the last session also we discussed about the unrecorded liability, that the biggest risk in liability side is completeness. And when there is a risk of completeness, there is a high risk that certain liabilities have gone unrecorded. So how to identify those unrecorded liabilities, what procedures we will do to do that. In the last session we discussed that as well. Today we will bring it to working paper as well. Then we will evaluate misstatements, whatever misstatements, three errors which I talked about, that in this working paper workbook, we will identify three types of errors, three different types of errors, how we are, how we are comprehending with those errors, how we are evaluating those misstatements, how we are taking it to reporting. So all those aspects we will look into. Apart from that, the conclusion memo, what conclusion we are deriving from this workbook, that also we will see, which will give us a full picture of what has happened throughout this process. And we will also discuss certain FAQs, and these FAQs will be subjected to all the 3 days whatever we have discussed till now. So today is the day when we will apply all the understanding which we have gathered in the past two sessions as well. Now coming to the procure to pay cycle. So before we get into the audit working paper, we need to understand the cycle of procurement to payment. So before we get into that, we also need to understand that every step creates a document and a control. So mind you that every process is a set of activities, and every activity may give rise to certain risks, and wherever there are risks there has to be corresponding controls as well. So every document which is created through the process, that will definitely be corresponded by a control as well. So that we will see how it happens. Substantive testing follows the paper trail through all these 7 processes. So procure to pay cycle, this covers the 7 sub processes which we will be covering through our working paper today. The first process is purchase requisition. If I am the user department and I want to buy something, I want to use something, so I will definitely raise an indent or a purchase requisition to the purchase department, that I need this item, or to the stores department as the case may be. Generally, purchase requisition is issued by the stores department to the purchase department, but and what happens, user department raises an indent for material to the stores department sees that if that material is available in the store or not. If it is not available, then they will place the order to the purchase department, and for that they issue a purchase requisition. So once purchase requisition has been raised, based on that, purchase department, after reviewing it, after inviting quotations, doing the comparatives of the quotations, identifying the level 1 vendor who is providing the exact specification of material what is required and at the best price and with the best delivery terms and credit terms. So that vendor is called as level 1 vendor. Then level 1 vendor is identified, and to that level 1 vendor, purchase order is issued by the purchase department. Then once the purchase order has been issued, post that when the supplier supplies the material to us, once we receive the material, goods received note is issued by the organization. So goods received note, goods received note is issued. Once goods received note has been issued, it means that the item purchased has hit the purchase account, the expense account. It has already hit now, right? So this is the till purchase order. There is no impact on books of accounts, but once goods received note has been issued, it means that we have received the material, it has hit our inventory and the corresponding purchase account. So goods received note is the first level at which books of accounts are impacted in case of procure to pay process. After goods have been received, we inspect the goods, whether those are meeting the specifications or not, whether those are having the same quality, the quality which was required from them or not. All that inspection happens, and once it passes the test of inspection, then we recognize the liability of the supplier by booking its invoice. So next step, that is number 4 step, supplier invoice. So we book the supplier invoice. Once supplier invoice has been booked, now a very important aspect which you each one of you should understand. There is a concept called three-way match. What does this three-way match indicate? It indicates that the purchase order, the goods received note, and the corresponding invoice, all three are matching or not. But in every situation, it will not match in the first instance, because what happens, purchase order may be for a large quantity, but we are receiving goods in parts. Maybe we have placed a purchase order for 1 lakh units of certain item, but goods are being received in parts, say 10,000 units per consignment we are receiving the goods, and accordingly supplier is raising invoices of 10,000 units which he has supplied in one lot. So purchase order will not get nullified or will not get matched with the corresponding goods received note and supplier invoices till the time the full quantity of purchase order has been supplied with the supplier to us. But to make the thing simple, consider that a purchase order has been issued for one consignment against which goods have been received and supplier invoice has been booked. When these three matches exactly, so that is called a three-way match procedure. If you refer to the ERP softwares which are there, like SAP, Oracle, and other ERP softwares which are quite prevalent, in all those softwares, this functionality is configured. It matches, that three-way match mechanism is there. In SAP, there are two segments in SAP primarily. One is the module. Module refers to the the items which goes through the standard process of purchase order, goods received note, supplier invoice. So through that process is happening. So that is one process which is called module, and the other module is FI module, which is basically if for certain items we have not raised any purchase order, then definitely that cannot be routed through module. So for that we need to pass it through JVs, through FI module. So similarly, in other softwares also similar is the functionality, that three-way match mechanism is there to have an automated control over the purchases. Now, sixth step is recording of liability. Once three-way match has been ensured, we record the liability and finally the payment is made. So if you refer to the statement which has been made out at the bottom of this slide, the three-way match PO versus GRN versus invoice is the pivotal control. When it works, it covers occurrence, accuracy, and partly completeness in one step. So why this is very important? Because it is addressing three of your assertions related to this process. One of occurrence that this particular transaction belongs to the entity and it has actually happened. Second is accuracy, whether at actual amounts, accurate amounts, the transaction has been recorded or not. And completeness is partly covered through this, because for completeness we need to identify even the unrecorded liabilities by doing cutoff procedures and other alternate procedures as well, right? So in this particular case, we will carry the same example that we are talking about the plywood manufacturer. Trade payable balance, as we have been carrying it since beginning, that is 742.1 lakhs, and there are 4200 active creditors for FY 25-26. So the same example we will carry for uh, planning our procedures with respect to procure to pay process. Moving ahead, so what can go wrong? So what can go wrong? How do we do that? That risks have been identified. We have to see what risks have been identified by the entity and what additional risks we have identified through our procedures. So all those risks will be listed, and those risks shall be mapped with corresponding assertion that how this risk will be addressed through this assertion that we need to see, and accordingly we will devise our procedures. If you go one by one, all the risks, the first risk says liabilities incurred but not booked. So we have incurred an expense, we have a liability in place, but we have not accounted for it. So this definitely relates to the risk of the assertion of completeness. And it is the most important assertion, as I have said again and again, that it is the most important assertion for liability side. And why it matters? Because there may be a risk of understatement of payables which may flatter the balance sheet. If we do not recognize expense, definitely it is going to hit our P&L also, and the corresponding liability has not been accounted for. So it will give a better look of the financial statements, which is not factual. Then next is invoices booked in the wrong period. So we talked at length about it. What do we mean by cutoff? First five GRNs, we discussed it about in the last session. Why it matters? It matters because purchases and payables shift between years, because current year purchases may be recorded in the next year, or next year purchases may be recorded in the current year. So that is the risk which is addressed through cutoff. Third is fictitious or duplicate supplier invoices. So there may be a risk that duplicate invoices have been booked. The same has invoice has been booked twice, or the services which we have not availed. Against that, if any fictitious invoices have been received and accounted for, so that is addressed through occurrence. Example, why it matters? Because through this cash siphoning happens, through this expense overstatement happens. So that is the reason why we have to ensure this. Fourth is wrong price, quantity, or arithmetic. So this relates to the assertion of accuracy. It is amply clear with the terms being used: wrong price, quantity, or arithmetic. So accuracy is the assertion here. So why it matters? Because liability may be misstated up or down. So it is not necessary that liability will always be understated. It may be misstated due to overstatement also, or understatement also, as the case may be. But primarily it's been seen that there is a higher risk of understatement in case of liabilities. Now, balances not actually owed by entity. So we may recognize certain balances, fictitious invoices maybe, which are actually against which actually the entity has not received any services or goods, but still those have been accounted for, even though we are not obligated to pay for it, but still we are paying for it. So how this risk is addressed? The assertion which is involved is rights and obligations, And why it matters? Because in case of group or agency amounts wrongly recorded. So maybe for a subsidiary, for an associate, this particular amount belongs to that entity. But instead of recognizing that amount in that related entity, we have recognized that amount in our entity. So there is a risk that, and generally it happens in case of related parties. Next is old or disputed balances carried at full. So there may be certain liabilities which are lying for maybe 3 years, 5 years, 7 years, and it is actually not payable, but we are still carrying it in our financial statements. So there is a risk of valuation as well. The assertion of valuation is involved in this. Why it matters? Because creditors may not be settled going forward, or forex has not been restated in case of foreign vendors. So forex restatement has not happened. That is why that amount is lying there, or we did not treat forex restatement rightly in books of accounts. That is why it is still hanging as a old item in creditors. So completeness, we have talked a lot about it, so I'm not lamenting it on again. Coming to the next slide. So here we will see the critical link, how planning, risk and controls shape the P2P plan. If you see, the first item is upstream input. The second item is conclusion reached for P2P. And third item is effect on substantive plan. So this will make it amply clear for you how this linkage is created. So first one is planning or materiality. So what we had decided even in the previous session, that the materiality we had kept at 50 lakhs, performance materiality was 32.5 lakhs, and trivial threshold was 2.5 lakhs. And for this, for computing this materiality, we had used benchmark benchmark of profit before taxes, and 5% of that amount was considered as materiality amount. If you are able to recollect the previous example, uh, how did we compute materiality? So in this case, in this workbook, we will be using these materialities, where materiality is 50 lakhs overall materiality, performance materiality is 32.5 lakhs, which is 65% of the overall materiality, and clearly trivial threshold is 2.5 lakhs, which is 5% of the overall materiality. So we have already discussed what we mean by materiality, what we mean by performance materiality, and what we mean by clearly trivial threshold, that we had discussed at length in previous sessions. So I'm not covering it again. So here, if you see, it sets the sample thresholds and what we have to follow, what we have to chase throughout our audit procedures. Now, risk assessment, if you see this, completeness definitely in case of liabilities is a significant risk. And what is its effect on the substantive plan? So we have to mandatorily do test of detail in case of trade payables completeness assertion, because it is a significant risk, and for every significant risk it is mandatory that test of details are also done. Only analytical procedures may not suffice for the purpose, right? So we just can't rely on substantive analytical procedures alone when it comes to significant risk. Now coming to the third item, which is internal control. So internal control evaluation, for internal control, three-way match is operating but partially effective. That we will see. I was talking about an error, that we will be identifying three errors. One of the error relates to three-way match, which has been identified as partially effective in the workbook, that we will see going forward. Now, next is IT ERP controls. Here, duplicate invoice is automatically blocked or not. If system has the capability that it will not allow booking of duplicate invoices with the same invoice numbers, it will not allow to be booked twice. So that is automatic control which is there in the IT. Whether that is on or not, that needs to be seen. If it is not not on, then definitely the master data mechanism seems to be weak. Then prior year file cutoff error found in the last year. So this is a prior year information which has been given here, that cutoff error was found in the last year. And what is its effect on substantive plan in the current year? That we will have to extend the cutoff window because it raises skepticism based on the past year experience. So accordingly, we will also, so one aspect which you should note here, that even the past year experience we need to take into picture while deciding on the procedures for the current year. So we cannot just ignore the results of the past year. We will have to keep that in view, right? Now, see, this will be the structure of the working paper. After this slide, we will directly move to the Excel workbook where we will see practically how it is happening. So these are the tabs which you will be seeing in the workbook. The first tab relates to the lead schedule I discussed some time back, related to trade payables. And second tab is risk assertion matrix, then substantive audit program, analytical procedures, sampling plan, vouching and three-way match, supplier statement reconciliation, external confirmation control, cutoff testing, search for unrecorded liabilities, creditors aging and valuation, audit difference summary. So now definitely it must be coming to your minds that for one area, if we are going to test so many things, then in 10-15 days of audit or 20 or 25 days of audit, how will we be able to complete everything? Because there will be many other key areas as well. So how do we do that? So let me tell you, even though you are able to see that a lot of areas are reflecting here in this slide, but once we start seeing the Excel workbook, you will find it easy to comprehend, easy to handle. Now let me share the Excel workbook with you. Just allow me a moment. My workbook is visible. Can please someone please confirm? Hello? Yes, it's visible, na? Okay, okay. Wonderful. Yeah. So this is a typical workbook which is created by a good auditor, and this particular workbook will definitely pass the test of experienced auditor. So here the subject entity is ABC Manufacturing, which deals in plywood. It is in the manufacturing of plywood. The period which has been covered here is financial year ended 31st March 26. Which account we are testing here? We are testing trade payables, which is a part of the process of procure to pay. So when we talk about procure to pay, it is from requisition till the payment process. The whole process is referred to as procure to pay process. And who are the auditors? So this is the auditor. Now coming to working paper. So this particular slide is just providing an index of all the working papers which are there as part of this workbook. So here if you see, all the working papers which discussed in the previous slide also, all those working papers are reflecting in column B from 13 to 25, cell number, row number 13 to 25, right? And against it, what assertion should be focused on in each of these working papers? Since it is a lead schedule, so definitely all the assertions will come into picture because it will cover all the balances. Then risk assertion matrix. So basically just you do not refer to these all, because these are till program we are just planning things, and post that from analytical procedures we are executing things in this workbook. So analytical procedures, we are trying to address the assertion of completeness and accuracy. For sampling plan, occurrence and accuracy, vouching and three-way match, occurrence and accuracy. Accordingly, for each of this working paper item, we have identified that which is the focus assertion in this working paper. Through this working paper, which assertion is being addressed. And we have also documented the result of this. So this result is the after the conclusion. This is directly linked to the conclusion sheet. So we will come to this later. Now, there are two, three things we need to understand with respect to understanding this file, that wherever you will see the blue colored figures, so those are basically hard coded input, right? Those are not coming through a formula or something. Those have not been derived. So that is the data which is the input data for us. And second is black colored figures are formula or calculation within the sheet, and green figures are the ones which have been pulled from other sheets which are linked with other sheets. Those are the green figures. So this color coding you can you can use based on your liking also, but if you refer to financial model convention which is basically referred to, so there you will get to see that similar modality has been used. That is why I have tried to include that as part of this working paper. Now, audit tick marks. So what these tick marks refer to? If this this tick mark is there, a tick, so then it refers to that it has been vouched or agreed without exception. If a cross is there, it means this is an exception. It has to be investigated further, and it has to be logged to the corrected or uncorrected misstatements for making our conclusion. It will have to be carried forward. Then if we recompute anything, so this particular tick mark is used if depreciation recomputation has been done, or any other recomputation for that matter. And wherever something is not applicable, so this tick mark is generally used. So throughout this working paper, you will see the use of these tick marks as well, and use of this color coding as well, where blue, black, and green colors have been used. Now coming to our first working paper, which relates to the planning. So if you refer to this planning sheet, what we have done here, we have tried to compute the materiality. We have identified risk and control reliance, which will basically drive this whole file, drive this whole workbook. So first portion of it is relates to materiality, that is dealt by SA 320. Here if you see the benchmark, we will input here. That benchmark, definitely in our case, that is profit before tax. That is 5% of the benchmark, which and the benchmark's figure is 1000 lakhs, that is 10 crores. 10 crores is the figure of profit before tax. Now, how much percentage we have applied to the benchmark for computation of overall materiality, that is 5%. And 5% comes to 50 lakhs. So our overall materiality is 50 lakhs. Then performance materiality, we have considered based on our judgment, based on our assessment of controls, that 65% of overall materiality may be considered as performance materiality. So that we have considered, and that brings this figure down to 32.5 lakhs. And clearly trivial threshold has been fixed at 5% of overall materiality, 5% of 1000. So that comes to 50 lakhs. 5,000, 5% of 50 lakhs, 5% of the overall materiality. So that comes to 2.5 lakhs. What are the key operating figures here for our analytical procedures we will be using? So purchases for the current year is 38 lakhs, 38 crores rather, and purchases for the prior year was 43 crores. So it has reduced as compared to previous year. What are the significant risks which we have identified in this scenario? that completeness has been identified as a significant risk. For liabilities, as I said, that completeness is always a significant risk that we need to consider. So completeness of payables, there may be a possibility that certain off ledger liabilities are there. So how do we address this risk? Our response will cover this, supplier reconciliations, which is covered in working paper E230, which we will see going forward, and cutoff testing we have done through another working paper, and we have tried to identify unrecorded liabilities also. That working paper you will see in E260. Cutoff period and timing of liabilities. This also has been considered a high risk, and to address this risk, what we have planned to do, we will test first five GRNs, first two GRNs, whatever be the case, so that testing of year-end GRNs and post-year-end GRNs is being considered as the response to this risk. Now coming to occurrence, there is a risk of fictitious or duplicate invoices. This also has been considered as a moderate risk. So here, our three-way match will give us a comfort that this particular transaction is addressing the assertion of occurrence for us or not. So that we will get to know through this three-way matching. Now, based on the above, what control reliance or evaluation of internal control results are there for us? For three-way match PO to GRN to invoice, we have seen that it was partially effective. So based on our assessment of internal controls, we are not considering here assessment of internal control. So here we are considering it partially effective, and reliance on this, we have limited reliance, and definitely we can reduce sampling, but not to that extent that detection risk will not be at acceptably low level. So we have to limit our detection risk. Accordingly, we will have to devise how many samples we have to test. Since it is partially effective, so that comfort we will be having to that extent. Now coming to duplicate invoice block, which is there in the ERP itself, that has been found to be effective. That system is having a functionality in it that duplicate invoices will not be allowed by the system. If a person tries to upload or account for the same invoice in duplicate, then system will not allow him to do so. So since that control is there itself in the system, so we have found it to be effective. And vendor master maintenance, that has been considered as a weak control with respect to stale records, because vendor master has not been updated timely. Say in vendor master, we had taken cancelled check from them as a proof for their account details 3 years back, and post that the vendor is not operating through that account and they are operating through some other bank account. Then what will happen, that even if we transfer amount to the previous account, that will be bounced, it will come back to us. So stale records has been identified as a weak area in case of vendor master maintenance in this case. So for vendor master, we will not rely on that, and we will have to test vendor master manually. Now coming to the next worksheet, it is the lead schedule. As I had explained, that it is nothing but it reflects the breakup of uh, a figure in a trial balance. In trial balance, there is a trade payable figure of 742.1 lakhs, which is reflecting in cell number D8, 742.1. But under this 742.1, there are three line items. The first line item is trade payables goods, which is 6.64 crores, trade payable services, which is 77 lakhs, and provision for invoices not received, that is zero. Now the question which may come up, that why this provision for invoices not received, even though which is grouped as part of trade payable has been, but still it is nil. But then also why we are capturing it here even though it's nil? So the reason being that In a manufacturing setup like a plywood manufacturing concern, it is highly unlikely that some or the other material is not in transit. And if something is in transit, there may be a high chance that depending on the terms with the vendor, there is a probability that the risk and reward to the goods have been transferred to us. Even though we have not received those goods in our factory yet, but since the risk and reward of those goods have been transferred to us, so somewhere we will have to look into it whether it has to be accounted for in our books of accounts or not. And if this provision has been considered at nil here, it is reflecting nil figure here, so it definitely raises some doubts that we need to look into it whether any goods in transit were there or not, or maybe we had received certain goods. We have received certain goods, but the corresponding invoices have not been booked. So that also may be a situation. So in both the situations, it becomes pertinent, it becomes important to see whether the corresponding provision for expense or provision for purchase is there in the books of accounts or not. Now coming to the next worksheet. So this is linking of risk and assertion. Here, what we have done, completeness has been considered as significant. This we have already seen. Cutoff, high, occurrence, moderate, accuracy and valuation rights and obligations have been considered as low based on the assessment of our controls. Control reliance in the first two cases is limited. In the third case, it's moderate. Accuracy, it is high. And in case of valuation rights and obligations, it is moderate. Then what are the planned substantive procedures? What we discussed in the E100, planning working paper, same responses you can see here. That for completeness, we will see supplier reconciliations, we will search for unrecorded liabilities, and we will do cutoff testing. For cutoff testing, what we will do, we will test GRNs, first five, last five, first two, last two, whatever be the case. For occurrence, we will do vouching of samples for three-way match from PO to GRN to invoice. So whether three-way match is there or not, it's subsisting or not, that we need to see. Then accuracy, recompute and sample rely on system arithmetic. So basically, the standard the standard system, the functionality it provides of calculations, so we will rely on that. Definitely IT general controls testing has to be done separately. If that has been done and we are comfortable with the IT general controls, then definitely we can rely on the system arithmetic. And apart from that, we will do some recomputation on samples also to ensure the assertion of accuracy. Then next is valuation rights and obligations. So for that, we will see the aging of the vendors, creditors, and we will also see that how the forex restatement has been done, whether it is proper or not, and whether it has been accounted for properly or not. Coming to the next working paper, which is substantive audit program. So here, what we have done, we have identified the procedures which we are going to do, the corresponding assertions, and here what we are doing, we are trying to do nature, timing and extent. In the previous working paper relate to the assertions, the identification and classification of those assertions, and previous to that we discussed about the risks at the planning stage, that risk assessment stage. So just try to recollect that chain which we discussed in the first and second session. That first is risk, then the next is assertion, and the third is your uh, nature, timing and extent of the procedures which we are going to follow. So this particular working paper will show you the nature of the procedures we are going to perform, the timing of the procedures, and the extent of the procedures. What will be the population, and all. So that we need to see. What need to be the sample size and all that needs to be seen. Now coming to procedure. So first procedure which we are going to do is analytical review. In analytical review, we will try to compute creator days. How many creator days are lying in creators? How many days of creators are lying in creator? How many days of purchases is lying in creditors? So that we will see. We will also see certain ratios. Through this we are trying to address the assertion of completeness and accuracy and the extent, since analytical procedures can be done on the overall population, so 100% of balance will be covered in this, and certain P&L line items will also be covered, that we will see in work paper E200. So work paper reference is also there, and who has prepared this working paper is also there. And if you refer to the second row, row number 2 of this sheet, you will see that in every working paper you will get to see the company name, the item which we are testing, trade payables, the financial year to which it relates, what is the denomination of the values in lakhs, and who has prepared it. AB has prepared it, and it is reviewed by CD. So who has prepared it and who has reviewed it has also been captured here. Then next is vouch purchases to three-way match. So three-way matching we will do for the assertions of occurrence and accuracy. For that we will do vouching of purchases. And what we will do, if you are able to recollect the previous session, there we had decided that out of the total population of 742 lakhs of creditors, and since our performance maturity was computed at 32.5 lakhs, so every vendor balance which is beyond 32.5 lakhs, that item we will definitely test. That will become a key item for me for testing. And such items we could identify were 18 in number. 18 suppliers are there who are holding a balance of more than 32.5 lakhs, which exceeds my performance maturity figure. So all those items we will have to test compulsorily. And those 18 items collectively in aggregate cover 69% of the population in terms of value. So 69% of the coverage we can do just by testing 18 samples. And for the rest of the population, that is 31% of 742 lakhs, that for that we will do sample testing. And here what we have decided, that we will be using monetary unit sampling for drawing the samples. So 25 samples we will be selecting using MUS, and this you will see in working paper E220. So that reference is also there, and the same person has prepared, done all this testing. So AB is the preparer in all the cases, and CD is the reviewer in all the cases. So it is consistent. Now coming to the third item, supplier statement reconciliation. This definitely we are doing for completeness, as discussed in the previous session also, that confirmation alone may not provide us absolute comfort on completeness. But if we obtain reconciliations also, then that will give us an added comfort. The reason being, because confirmation will be including only the closing balance, but there may be certain transactions which have been missed out from the confirmation. So those items can be identified through reconciliation. So for doing this exercise, what sample basis we have opted for, that is we will be selecting top 15 suppliers by value, and we will be sending out confirmations to those 15 parties, confirmation requests to those 15 parties. And for those 15 parties we will be also obtaining the reconciliations between the supplier's ledger and our ledger. So top 15 suppliers by value has been selected for this purpose. So this will be reflected in working paper E230, we will see going forward. Then next is external confirmation of balances. So we will obtain external confirmations. So as discussed, top 15 suppliers we have identified already for reconciliation. So the same set of suppliers we are using for even inviting the external confirmations too. So this would ensure the risk of existence and rights and obligations. And this working paper is E240. Cutoff for cutoff we are considering GRNs and invoices. Plus minus year end means before year end and after year end. Through this we will be addressing the assertion of cutoff. And first five each side will be we will be doing. Work paper reference will be E250. Then the most important, searching for the unrecorded liabilities for ensuring the assertion of completeness. So for this, what we have planned, we will check post year end payments, subsequent testing we will do, and subsequent invoices also we will check whether those pertain to this period or not. So that we will cover through searching the unrecorded liability and by conducting these two procedures. And this work paper is E260. Now coming to aging and forex restatement review, this will ensure the assertion of valuation. For this, what we are doing, we are obtaining the aging, and we are looking for the buckets of aging which are beyond 180 days. So items aged more than 180 days shall be considered for the purpose of our uh, uh, analysis. So we will try to identify the items which are older than 180 days. Parties, balances which are older than 180 days. So this is reflected in working paper 270.
So
Now
we have
coming to,
received two
yes,
queries.
yeah,
Okay, one of the student is asking, okay, thank you for sharing the practical workbook on trade payables.
yeah.
Does this workbook work with a single point of entry, and is it linked and macro enabled?
Okay. So that's a very good question. So basically, ideally, we should be using macro enabled worksheets. We can definitely do it through using macros to reduce the workload. That can be done. But this particular workbook is just to show you that what is the process flow which we follow in creating a working paper, how it is linked to the risks, to the planning stage, to the internal control evaluation. That I'm just trying to demonstrate to you. So once you have all the data in place, you have done all the testing, definitely you can try to implement some innovative ideas by using macro workbooks or whatever, or maybe AI tools also you can use. So that improvisation definitely you can do at your end. So this workbook, definitely it is linked. As I said in the beginning itself, the figures which are in green are linked figures. Those are coming from somewhere. The blue figures are the hard coded figures. Those inputs we have taken from somewhere doing our procedures. And the black figures are the ones, so basically which are the derivation of something. Those have been derived. Just for example, if you see this variance figure, this has been derived uh, by deducting E5 minus D5. By using this formula, we have derived this variance. So this is the way through which this particular workbook has been prepared. Definitely improvisation, innovation, that can be definitely done by you, undoubtedly. And that we have to do in any case. Today's session is mainly to make you understand that how we create working papers, right? Okay, moving forward. So now, so first, till now, what we have done, till 120, E120, what we have done, all these is part of planning itself. If you see that planning tab was there, then lead sheet tab is here, where we have seen that what are the variances. Then risk matrix is there, where we try to map the assertions to the risk, and then we try to determine the nature, timing, and extent of the procedures which we are going to do. So till 120 100 series, so till 100 series, what we have tried to do, we have tried to plan our procedures, what procedures we will be doing considering the risk assessment results, the control evaluation results. So these, now we have boiled down to the exact procedures which we are going to do in our analytical procedures and as part of our test of details. So now we are moving forward to the analytical procedures, that what procedures we are following here. So as part of the analytical procedures, what we have done here, we have computed the creator days and we have compared it year on year, and we have tried to build an expectation also based on our judgment, based on our assessment. We also tried to compare the ratio of payables as a percentage of purchases, and we have also seen the goods payables growth. So what has been the trade payable growth year on year, that also we have tried to map. If we refer to the first item, that is creator days, this is nothing but payables divided by purchases into 365 days. So in the previous year, this particular metric was 58 days. And we expected, based on the overall operations and based on the assessment of the uh, assessment of all the developments which have happened during the year, we expected that it should not exceed 60 in any case. So this is definitely having a threshold also of 2 days as compared to the previous year. So we expected that if it is closer to 60, then we do not have any issue per se. But if it is not very close to 60 and it is far away from it, then definitely we will have to drill it down further. So what does it say? That analytical procedure is going to provide you only an indication that where you need to focus. It will not provide you conclusion. Please mind it. You cannot conclude based on the analytical procedures unless and until it is as simple as computing 12 months rental. That monthly rent is 10,000 rupees, annual rent is 1,20,000 rupees. If it is not as simple as that, then definitely analytical procedures will cannot give you conclusion. It will give you indication. It will support you for focusing on important things. So that's exactly what we are trying to do here. In the previous year, the number of days, creditor days was 58 days. We expected it to not exceed 60 days in any case. And what we have seen, we have computed it to be 71 days. And this figure is linked also to the creditor and purchases figure. So here we can see that there is a variance of 11 days, which is significant. So here what we have decided as auditor, that we need to further investigate it. So status as of now is that we need to investigate it further. Now coming to the next line item, which is payables as a percentage of purchases. In the previous year, it was 15.9%. In the current period, we expected it not to exceed 16% by keeping a small threshold too. And actual is 19.5. Again, there is a gap of 3.5%, which is again significant. And we will again park it for investigating further. Third line item, goods payable growth year on year. Here, since previous to previous data was not available in this workbook, that is why it could not compute the previous year figure. But what we expect is 6% and the actual is 8.6%. Here, we have identified that there is a variance of 2.6% only. So based on our judgment, we have decided that this item is okay. We need not investigate it any further. Right? So if you just read through this flag item, which is in red at the bottom, it says creditor days rose from 58 to 71 against an expectation of 60 days. Analytics points, it does not conclude. As I said, it will just point, it will not conclude. The rise is run down through cutoff. So definitely we will have to do cutoff testing to see because there is a risk. There is a risk that there may be a misstatement in creditors. So cutoff testing we will have to focus on, and also we will have to focus on any unrecorded liabilities that we will do through work paper E260. We will cover it in that. So which is where the two errors are found. So here the major risk after these analytical procedures seems to be inclined towards the completeness. So we will be covering that in the subsequent working papers. Now, sampling plan. So now we are coming to the test of details. So for that, first and foremost, we need to plan the sampling. That what all samples we will pick, how many samples we will pick. So here again, as discussed, that population of trade payables is 742 lakhs. Yes. Then key item threshold is 32.5 lakhs. So basically our performance maturity is 32.5 lakhs. These are linked figures. That is why these are in green. Number of active creditors are 4200. They are total 4200 creditors. Value of items above threshold is 511 lakhs. So what does it mean? That out of 742 lakhs, 511 lakhs pertains to only these 18 parties, which are surpassing the threshold of 32.5 lakhs. So these parties becomes key parties for me to test. So these samples have to be considered in our sample set. So what we have done, we have stratified the samples. This is called stratified sampling as well. What is the stratum here? That key items we will test 100%. 18 such items are there. The value is 511 lakhs and the coverage is close to 69%. And for the rest of the items, for the tail items, that is 31%. What we are trying to do, we have identified 25 samples and we are using monetary unit sampling method to identify the samples. So out of 4182 items, that is 4200 minus 18, 4182 items, we have determined that 25 samples we will pick, which will cover my 31.11% of the population as representative samples. So here, based on this sampling exercise, what we have done here, sampling plan exercise rather. So what is the conclusion here? That key items, for key items, we will test the majority of the value and we will cover it 100%. The MUS samples gives larger residual balances. So whatever larger balances will be there, generally monetary unit sampling methodology picks those samples only. Then balances a proportionately higher chance of selection, and sampling the ledger can never find what is not on it. Completeness is covered by these three working papers, which we are going to discuss further. Now coming to the next working paper. Here what we are doing, here we are vouching. We are doing the vouching and we are trying to do the three-way match.
Sir,
To
one of
address,
the
yeah,
sorry to interrupt. One of the
yeah.
student is asking, as you are continuously recommending us to investigate, can auditor really go for investigation?
No, here investigation doesn't mean that we are investigating like police. So investigating here means that we will further drill it down further. We will drill it down further by doing our audit procedures. Maybe by increasing the sample size, maybe doing more analytical procedures, maybe by doing some ratio analysis further, maybe by doing 100% of sampling wherever possible, wherever feasible. Like in the case of 18 samples, we are testing all those 18 samples since those are surpassing 32.5 lakhs, right? So we are trying majority of the population by just testing 18 samples. So investigating further means that we will do further procedures to give ourselves comfort on the audit, that there are no misstatements, right? Don't misunderstand it with the investigation which is usually conducted by police or CBI. That is not that investigation. But definitely, as far as our verification, vouching, and other procedures are concerned, definitely we can do investigation. Yes. So moving ahead. So here, what we have done here, only few items have been listed because there is no point in showing you all 43 samples. So what I have done here, I have picked few samples here for you to see. Like in the first sample K01, you will see that supplier is Veneer Mills Private Limited. Its amount is 84.2 lakhs, and that's the reason it has been picked, because it exceeds the threshold of 32.5 lakhs. So here, since we are testing it for three-way match for ensuring occurrence and accuracy of the transactions, so here we see that POs are there, GRNs are there, and invoice is there, and all three are matching. So three-way match, in the three-way match, I did not find any issue with it. Similarly, in the second case also, which is beyond 32.5 lakhs, here also could not identify any issue as such in three-way match. In the third item, which is 39.4, here what I could see that PO was there, invoice has been booked, but GRN has not been accounted for. So what does it implicate? It says that the expense has not actually been accounted for. Unless and until we recognize the GRN, unless until we raise the GRN, goods received note, it will not hit our inventory also, right? So what does it mean? That our purchase is also understated, and our inventory is also understated. So this is one issue which we have identified in one of these samples. And we also picked service invoice. In service invoice, there was no PO or GRN, but practically what happens, there may be SRN, service receipt note, there may be a service PO, that happens. But here in this case, in this example, it is considered that since it is a service, there is no PO or no GRN. So here only invoice is there, and we have found it to be okay by testing the supportings also, and we have seen that three-way matching may not be applicable here in this case. And similarly, other 40 items were also vouched, and we have seen all have matched. No issues have been identified. So here, what does it portrays? It is just a symbolic thing to show you that how we take it forward. So out of the 43 samples which we have tested, in one sample, we have identified that GRN has not been accounted for, which is impacting my inventory also, and which is impacting my purchases also, right? So this is here in this case, what has happened, this is a control failure, right? There is a control issue that GRN did not get recognized. So in this case, basically what has happened, just to add to what I said, in this case, they have directly booked the invoice as an expense. PO was there, corresponding PO was there, but they did not route it through GRN. They directly accounted for the invoice in the party, and the corresponding amount was debited to expense. So expense is not understated in this case, or but so this is basically a control failure and not a misstatement of amount. So in this case, what we will do, we will take it to the deficiencies memo, because this is a control deficiency, and GRN completeness inquiry has to be widened further. Now coming to the next working paper. This is with respect to supplier statement reconciliation. This we are doing for completeness test, because partially through reconciliation we can get comfort on completeness. So here, same parties, per as per supplier confirmation, if you refer to column C, as per supplier confirmation, these are the balances, and as per books, these are the balances in D column. So what differences which we have identified? So in two of the parties have totally matched veneer and hardware. These two have matched, but adhesive and plywood, we have identified certain differences between the confirmation and books. So in the first case, when we further drill down, when we tried to identify the reason for this difference, we could find that one of the invoice was in transit. It was, and it was a valid transaction, and the management has decided to the management has made the correction in books. They have recognized it as uh, recognized in their books of accounts. Now, in the third item, which is plywood, here we have identified a difference of 2.8 lakhs. On further drilling down, we got to know that there is a dispute on the rate between the company we are auditing and the party with whom we are transacting, with the vendor. So there is a dispute, and that dispute has given rise to a difference of 2.8 lakhs. And when there is a dispute, there might be a possibility that the result may come in my favor. There might be a possibility that it may go in the favor of the party also. So it needs to be further investigated for sure. So that we need to see subsequently how we are taking care of this item. So if you see here, uncorrected difference carried here, that is 2.8, which relates to disputed rate difference. Client has to confirm, and till now it is uncorrected. So here, if you just refer to the note below, reconciliation surfaces what confirmations and sampling cannot. Amounts the supplier shows, but our ledger does not. That is 1.9 lakh in transit will be accrued. So they have accrued that amount, and 2.8 lakh disputed item is uncorrected, and that will flow to SA 450. In our case, it is working paper number E900. It will flow to that in our conclusions basically. Now coming to E240 confirmation. So this is for, so now we have done reconciliation also. We have seen the reconciliation, supply reconciliation, and we have identified an error there as well. So now we are floating the external confirmation requests. So 15 parties we had identified that we will float this request to 15 parties. So request on auditor letterhead, our return address. So we have sent those requests on our letterhead because we are obtaining those confirmations directly from the party. Direct confirmation we are inviting, and we have to mention the return address also there, that please respond to our request by sending the confirmation on this address. So we will have to put the return address as well in our letter. So that has to be mailed by us, and it should never be handed to the client. So if at all we have identified those 15 parties to be sent confirmation requests, so those have to be mailed by us. We cannot ask the client to mail it. So that again, so basically what is most important here, to keep the control of the overall process. So we have to keep control of the confirmation process entirely in our hands. We cannot hand it over to the client in any case. Then the third is blank positive form. So what does it mean? Blank positive form means that I will not mention the amount of liability that is reflecting in the books of accounts of the auditee. I will not put any amount there, because if I put the amount, the party may be considering that, okay, let me write agreed and send it back. They will not put in effort to check the amount from their books of account. That possibility may be there. So that is the reason why we send blank positive form. And why positive? As we discussed in the previous session, there may be two types of confirmations. One may be positive and one may be negative. Positive is the one where even though they agree to the balance, they will be responding. But in case of negative, only if they disagree to the balance, then only they will revert. So here two things are there in this confirmation request, that we are sending a blank, we are not filling any figure there, and we are sending a positive confirmation that they will have to respond to that confirmation request. Now send to 15 suppliers. So out of 15 suppliers, we have assumed here that 11 have replied, which covers 73% of the balance, aggregate balance of those 15 suppliers. So 73% balance has been covered. So here the status is that we have sent the confirmation to 15 suppliers. All these 4 steps have been done by us as of now. Then the last step here is that 4 non-replies. So we have not received 4 replies from the creditors. So as discussed previously also, we will do the alternative procedures. What alternative procedures we have to do? We will do the subsequent testing. Subsequent payment testing we will have to do. We will have to see whether subsequent payments, whatever are reflecting in the books of accounts, whether that relates to the current period or not. Right? Whether these parties have actually been paid subsequently or not. Say a party X is reflecting here and it is showing a balance of 10 lakhs. Subsequently, we see that the payment to that party has been made of only 5 lakhs and 5 lakh has been reversed. So that definitely brings a doubt in our minds that the actual liability could have been only 5 lakhs, but maybe they have recognized it at 10 lakhs or vice versa. Subsequently, they made a payment of 20 lakhs, but the liability which was reflecting in our books was 10 lakhs only. And when we see that actual contractual value was 20 lakhs only, but they had paid only, and accordingly they have paid. But while creating the liability as at the year end, they had created only for 10 lakhs. So that could be one example. Why a blank, not a pre-filled form for creditors? That I have already told you. So same thing is written over here as well. And after doing this exercise in this working paper, what is the conclusion? That confirmations corroborate existence and rights and obligations strongly. For completeness, the supply reconciliation does the heavy lifting. So this is for your understanding. This is not the conclusion of this working paper. So conclusions we will see further in subsequent working papers. So supply reconciliation does the heavy lifting for completeness, and the tools are complementary and those are not interchangeable. So what does it mean? We cannot use subsequent testing for accuracy. We cannot use vouching for ensuring completeness. So right tool has to be has to be used at the right place. Right tool has to be used to address the right assertion. So that thing we have to keep in mind. And one more thing, that if you are performing any procedure, unless and until you are able to identify a particular assertion for which you are testing it, don't start testing it, because you will have to link it to some or the other assertion. So assertion, you will have to identify that which assertion it will, for which assertion I am testing this or I am doing this procedure for. So that needs to be seen. Now coming to E250 cutoff testing, does the liability land in the right year? So as discussed, that here if you see 3 samples you could see of the year end samples which are close to year end, and post year end samples are 2, 2nd April and 3rd April. So 5 samples we have picked in total. So here these samples relates to these 5 suppliers. These are the amounts involved, and here we have seen that invoices have been booked when, and what should have been the correct year in which these invoices should have been booked. Based on our testing, we have seen that correct year is, in third case, the correct year is 25-26, that is current year. But when they have booked it, they have booked it in April 26. So what does it portray? It portrays that the liability is understated, and as envisaged, now we can see that actually there is a risk of completeness which has resulted in understatement of liability. So there we could identify an error. So this is the third error we were talking about. So here if you just read through it, here if you see the cutoff understatement is 6.8 lakhs. So this is a factual misstatement which we could identify. So what is the flag here? That is goods received 31st March, but the invoice was booked in April. Payables and purchases understated by 6.8 lakhs in FY 25-26. This is a factual misstatement. Proposed entry above carried to the SA 450 summary. So this particular entry said debit purchases and trade payables. This has been taken to my SA 450 summary, that is working paper E900. Coming to the next working paper, which deals with search for unrecorded liabilities, the completeness backstop. So basically, this is the most important working paper in the entire trade payables workbook, because this is testing the assertion of completeness. So here what we are doing, what source we have reviewed? We reviewed April bank statements of Veneer Mills. We have reviewed. So April bank statement is reflecting that 84.2 lakhs have been paid to Veneer Mills, and it relates to March purchases. And we have seen that this purchase has already been booked by the end of March. So here definitely no action has to be taken because they have correctly accounted it in the right year. Second case relates to unposted invoice tray. Here the supplier is power utility. The amount involved is 3.4 lakhs and it relates to March electricity expense. So here we see that March electricity expense has not been booked by the entity. So that went unrecorded. So here definitely the action which is required is accrual of this expense, but this accrual has not been done as of now by the entity. Then third thing what we have seen is April GRN register, subsequent GRN. So when we see that, we could see that hardware traders was there, 12.4 lakhs was the subject amount, and it relates to April only. The goods have been received in April only. So then we saw that whether this amount was booked till the year end or not. So we saw that it has not been booked till year end, and hence no action is required further. Then we did subsequent payments testing, which is any subsequent payments greater than 2.5 lakhs we have tried to identify. So various were there, 8 were there, and all matched. No issue could be identified here. So no action, no further action is required even in this case. So here through this working paper, we have identified one major issue, that is March electricity expense has not been accrued by the entity. So, and this is a factual misstatement. So again, this we will take to SA March electricity. If you just read through this flag, March electricity invoice received in April and never accrued, a classic completeness miss, and exactly what the 0.0 provision flag on the lead schedule. If you just recollect the lead schedule, I'll just show it to you once. In the lead schedule, when we discussed this row number 7, provision for invoices not received. So ideally, that electricity amount should have sit here. But since that was not recorded, that was not accrued, it was showing a nil figure. So just because a figure is nil, it does not mean that we will not test it. So we need to understand the nature of the business. Since the nature in this case is plywood manufacturing, so there is a high probability that some or the other consignment may be in transit also, and there may be a case where goods have already been received, but invoices are yet to be received. And majorly in case of services, it happens with respect to freight services, transportation cost. So for transportation cost, what happens? Transporters raise the bill for several consignments together. So what happens? There is a high probability that March bill is received in April. So that definitely brings a question in our mind that whether all the expense accruals have been done by the client or not. So coming back to the flow of document which we were going through. Yes. So here 3.4 lakhs accrual is missing that we discussed. Now coming to work paper 270. So this is for review of creditors aging and to see whether the valuation of creditors is correct or not. So here we have obtained the aging and we have seen that the aging ties to the lead schedule or not. In the lead schedule, we see that 742 is the total creditor balance, and as per aging also 742 is the creditor balance. So it says that the aging is complete in this respect because it is reflecting, it is matching with the lead schedule. It is matching with the balance reflecting in trial balance. So here if you see that 0 to 90 days is 598 lakhs, which is close to 80%. 91 to 180 days is 96.5 lakhs, which is close to 13%. 181 to 365 days, 31.2 lakhs, 4.2%. And over 365 days is 16.4 lakhs, 2.2%. And as discussed previously, that our focus is majorly on items which are older than 180 days. If you review to the comments, for 0 to 90, the comment here is though all these are current and within terms. And in the second item, these items, since these are 91 to 180 days, these needs to be monitored but and followed up on overdue, but these are not big concern area for me as auditor. Now coming to the items which are beyond 180 days. So here we need to see that any disputes are there or whether intentionally any items have been hold or any dues have been on hold. They are not releasing the payments. If any issues are there, we need to understand what is the issue behind it. And for rest of the balance, that is 16.4 lakhs, we need to confirm whether it is actually payable or not, because it's more than 1 year. Whether this liability is a fictitious liability, this is actually required or not, that we need to see. And we also need to see if this item, this balance is reflecting only on account of restatement of certain foreign balance. That forex restatement accounting has not been done effectively. That is why this balance is reflecting here in creditors. Maybe that has not been done appropriately. So for these things, we will be testing this. And here the note says over 365 days balance need confirmation that they remain payable, and if foreign currency restatement at the closing rate as per Ind AS 21, old credit balances sometimes require write back, not provision. So there may be a probability that if a very old credit balances are there, because over 365 days does not mean 1 year only. Maybe there are certain balances which are 5 years old, 10 years old. So we need to understand whether old credit balances require write back or not. If write back is required, then definitely the approval of the management must be there. Without their approval, any write back should not be done. Coming to the next working paper. So this is finally the audit difference summary. So now we are marching towards the conclusion. So first step towards conclusion is cumulation of all the audit differences which we have identified. So in E250 work paper related to cutoff, there we identified that 6.8 lakhs of invoice. That invoice was in April, but goods were received in March itself, but this liability was not recognized. So this was a factual understatement which we could identify. So this has been documented here. Then next is unrecorded March electricity bill, that is 3.4 lakhs. That is again a factual misstatement. And third one is disputed rate difference. And in this case, we could see that this was basically judgmental one, because dispute is something which is not within our control. This is the dispute between two parties. So either the dispute may be settled amicably or it may be settled through court of law. So it definitely depends on the judgment that what is the probability that we will be paying this amount or what is the probability that we need not pay this amount. So this is definitely judgmental. But still, this is a case of understatement too. So here, total identified misstatement is 13 lakhs. If we aggregate these three, then we come to 13 lakhs. Now, out of these 13 lakhs, the client agreed to make the first two changes in books of accounts. 6.8 lakhs and 3.4 lakhs, they have agreed to account for. And that correction totals to 10.2 lakhs. Then finally, we are left with only one misstatement, which is an uncorrected one, which is 2.8 lakhs with respect to disputed rate difference. So this is something which we will carry forward to our next working paper. Then evaluation against materiality. Now we need to see that the misstatement which we have identified, whether this is material enough that we need to accumulate it as uncorrected misstatement or not. And for that test, as we discussed previously also, if any uncorrected misstatement exceeds the clearly trivial threshold, then only we accumulate it. If it is below clearly trivial threshold, then we will not accumulate it. So in this case, since 2.8 lakhs, 2.8 lakhs is beyond the clearly trivial threshold of 2.5 lakhs. So our clearly trivial threshold which we had fixed was 2.5 lakhs. That was 5% of the overall materiality. It is exceeding that, right? So definitely we will accumulate it in the sheet of uncorrected misstatements because it is exceeding the clearly trivial threshold, right? But will it impact my opinion directly? Will this misstatement will impact my opinion directly? Do I need to modify my opinion? No, I did not modify my opinion. I would have modified my opinion only in case the misstatement exceeded my materiality figure. So clearly trivial threshold is looked at from the perspective that if anything exceeds it, but it is below the materiality figure, then we accumulate it to aggregate that whether in aggregate all the misstatements together are exceeding the materiality figure or not, to check that. So this is definitely accumulating in the uncorrected misstatements, but on this alone we cannot decide whether opinion has to be modified or not. So for this we will not be modifying the opinion. If such misstatements were more such misstatements were there, and collectively if all the misstatements, uncorrected misstatements exceeded the materiality threshold, then definitely we would have modified the report. Okay, now coming to the next sheet, which is a conclusion memo. So our objective, work performed, results we all are now, by now we all have understood that there are three issues which we noted. Two have been corrected and one remains uncorrected. So here the conclusion reads, subject to the above, trade payables are fairly stated in all material respects. All relevant assertions, including the significant completeness risk, are satisfied. No modification to the audit opinion arises from this area. So from the area of trade payables, even after accumulating all the misstatements, uncorrected misstatements, there is only one for accumulation. So that does not exceed the materiality figure. Hence, trade payables reflects a true and fair view of the financial position of the entity. Hence, no modification is required in this respect. So here, if you see, this working paper has been signed off by the preparer, and it has also been signed off with date by the reviewer. If you go to the first sheet, the index sheet, here you will see that the third column which we did not discuss then. So here if you see lead schedule, it is agreeing to the ledger. Just a minute. Yes. Lead schedule, it is agreed to ledger. Risk assessment matrix, completeness has been was identified as the significant risk. Substantive audit program, we planned and performed. Analytical procedures, creditor days were flagged to further investigate, for which we did completeness testing. Sampling plan, 18 key items were identified which were exceeding the threshold of performance materiality, and 25 other samples were selected from rest of the population. Vouching and three-way match, one control or exception we could identify in three-way match where GRN was not raised. Supplier statement reconciliation, one disputed balance was identified of 2.8 lakhs, which was considered to be exceeding the clearly trivial threshold. Hence, it was accumulated to uncorrected misstatements. But in totality, in aggregate, it was not exceeding the the maturity figure. Hence, the opinion is not modified. Then external confirmation control, out of 15, 11 responded. So 73% responses we received. And for the rest, we conducted the alternate procedures. Cutoff testing. In cutoff testing, we identified one error which they subsequently corrected. There was an understatement of 6.8 lakhs. For unrecorded liabilities, one electricity bill we had identified of 3.4 lakhs, which remained unrecorded. But after our identification, they have agreed to make that audit adjustment in books of accounts. Then creditors aging and valuation, this ties to the lead schedule. So it ensures that aging is complete, and upon review of the aging, we have identified that no major issue could be identified from that. Audit difference summary, no uncorrected items are there which are so material, and in the conclusion memo, opinion remains unmodified. So this is a summary of this index. So this is about this working paper. I have just tried to demonstrate you how a working paper look like. So definitely it is just a symbolic working paper. It may be further detailed one, and generally the working papers are more detailed than what we are seeing here, because here we have just tried to capture the essence of each working paper. But if we actually do it in the live scenario, then definitely it may entail certain other details as well. It may be more detailed, right? So I'm just closing this work paper. Now I'm coming back to the presentation. Till now, anyone is having any questions? Let me just check the chat box. So I do not see any messages here.
Sir, one
Any
of the
questions,
student is
anyone? Yes.
asking.
Yeah.
Yeah, one of the student is asking, performance materiality threshold can be changed or need to be consistent for any item?
No, no, no. See, first and foremost, please understand, planning is highly dynamic based on the results in your journey as you move forward. So you will have to modify your planning accordingly to get maximum comfort. So performance maturity, whatever we have fixed, generally we keep it consistent. But if at all, based on your assessment of controls and other parameters, other factors, if you come across such situations where you feel that this performance maturity is on a higher side, then definitely you can set a lower performance maturity for a particular area. So for trade payables, if you would have identified that this is a significant risk area for us, the whole trade payable, there is a significant risk of completeness. The internal control surrounding this trade payables is very weak. So if that was the contention, then we could have set the performance maturity lower for accumulating of uncorrected misstatements for trade payables. So it is highly dynamic. So we just don't need to stick by one performance mandatory figure. So definitely we can change it depending on the results of our audit procedures, which we keep on doing after. And in course, if we feel that it has to be brought down or it has to be brought up, then we can accordingly decide. But generally, increasing it is not suggested, but decreasing it definitely can be done because it enhances your procedures, right? So hope I am clear to you. Any other question, ma'am?
Yes, sir. The last one is, what if the specific company is going for merger or acquisition? How will that impact this substantive testing during that previous year?
See, if there has been a merger and acquisition, say two companies have amalgamated, or one company is acquiring another company or acquired another company in the previous year, so definitely that particular exercise has to be done separately. What will happen relating to M&A? Definitely there will be a scheme of merger. Say a merger has happened, there will be a scheme of merger which has been approved by the NCLT. So we will refer to that scheme of merger, and accounting treatment is also there in the scheme of merger. That what accounting treatment will be done of the purchase consideration which is being paid, or the assets which are being offloaded, whatever. So that accounting treatment is also part of that scheme of merger itself. So we will have to peruse that scheme of merger, and we have to see that the financial statements, in the financial statements and books of accounts, all the necessary adjustments as envisaged by that scheme of merger have been done or not. So that will be a separate working paper altogether, that whether all the impact of merger and acquisition as approved by NCLT has been accounted for in the books of accounts or not. So rather than doing it in each working paper for each area, we should ideally create one comprehensive working paper for merger and acquisition adjustments. And for in each working paper, we can refer that particular working paper wherever needed. So that will give you a complete picture that whatever was required by the scheme of merger, whether all has been taken care of or not at one place. And definitely wherever that working paper has to be referred to can be referred to. Hope I am clear. Now, any other query, Ankita, or should I move forward?
Yes, sir. You can move forward.
Okay. So let me just share my presentation again. So we will move forward with that. Yeah. So the last slide which we discussed was the structure of the workbook. So the next 13-14 slides reflects exactly what we have seen in the workbook. So lead schedule we have seen, risk assessment matrix we have seen, substantive audit program we have seen, analytical procedures we discussed, sampling plan also we have seen. The same thing is reflecting here. Vouching and three-way match we discussed, supplier statement reconciliation we discussed, external confirmation control, we should have a complete control on the process, that we discussed. Cutoff testing has been discussed, and one error which was identified in this was also discussed. Search for unrecorded liability was discussed, where we identified the electricity non-accrual. Audit difference summary we discussed. We also discussed that uncorrected misstatement was exceeding CTT, whether that has to be carried to the uncorrected misstatements work paper or not, and whether this would require modification or not, that we discussed. And the final conclusion memo, this we discussed that modification is not required in case of trade payables. It is reflecting true and fair view of the affairs of the company. So now, after having reviewed the whole thing, right from the planning till the conclusion and reporting, so what chain we have covered here? So planning, including linking it with risk assessment and internal controls, where we discussed materiality, significant risk, control reliance. we discussed about the audit program in working paper 120, where we planned responses assertion wise. Then we discussed the working papers from 200 to 270, where we gathered evidences. We cross-referenced those working papers wherever needed. Then we identified misstatements in work paper 900 in accordance with SA 450. We accumulated and evaluated its impact on our audit report. Then we arrived at the conclusion in E099 work paper, where all the assertions have been satisfied and hence no modification was required. And accordingly, we gave our audit opinion on trade payables, that it is fairly stated. So 2 errors found, 2 were corrected, 1 immaterial residual, 1 control deficiency reported to the TCWG also, and every step is documented and linked. A reviewer can reperform your judgment from the file alone. So tell me one thing, from this particular file which we have prepared, does the reviewer wants any further information from you? Because everything, whatever information was required by a reviewer to review a working paper is there in this working paper, in this workbook. So it definitely passes the test of experienced auditor, as we discussed in the previous session. What makes the file stand up? So SA 230 deals with the documentation, not documented, not done. And the documentation should be such that it should pass the test of experienced auditor. A competent auditor with no prior connection should understand what you did, why, and what you concluded. So an experienced auditor will definitely be able to understand this working paper in entirety. Now, here, if you see what were the traits in the workbook which we discussed. So each work paper showed the entity to which it belongs, the period, the account which we are testing, the preparer and reviewer, and the date on which it was performed, on which it was prepared and reviewed. So that identification was there, cross-referencing was there wherever cross-referencing was required with the lead schedule and other working papers, that cross-referencing was there. Tick marks were there wherever required, wherever errors were there, that cross sign was there, wherever we found it right, that tick was there, right? Those tick marks were also there. Source and extent, what population, what sample basis, sampling basis was there, that 18 samples we selected which were exceeding 32.5, and for rest of the samples we decided to do identify samples based on MUS, monetary unit sampling method, and we determined that 25 samples have to be tested. So source and extent also was very clear in the workbook. Exceptions logged, errors and deficiencies recorded, evaluated, followed through, and conclusions were stated clearly. Each section answers whether assertions are getting satisfied or not. So every working paper was answering that whether assertions for which we have prepared that working paper was addressing that assertion or not. So in totality, if you refer to that workbook which we just discussed, that makes it highly defensible. Now coming to common procure to pay pitfalls. What are the major mistakes which we do? First is testing only what's on the ledger. So we do only vouching, we don't do tracing for completeness. So that is what it means. So we don't look for off-ledger transactions or balances. Pre-filling confirmation balances. If we fill up the balances and send to creditors, then they may lazily agree to those balances. To avoid that situation, we send blank positive confirmation requests. Third is treating analytics as a conclusion. So analytical procedures itself cannot provide conclusion. That gives us indication and that supports us in identifying the most critical and focus areas. But actually, if you corroborate analytical procedures with test of details, then only you arrive at a proper conclusion. You are able to gather a proper audit evidence, a complete audit evidence. then ignoring the nil lines. So in that case, that provision, if you recollect, that electricity provision was not created and that balance was reflecting at nil. So just because a balance is nil, we should not leave it at the face of it. We need to understand whether this balance should be nil or not. If it should not be nil, given the nature of the entity, nature of its business, then definitely we have to drill it down further. Narrow cutoff window test, we have to test enough on both the sides before year end and after year end. One day of here and there may bring a significant impact on the overall financial statements. Just imagine a situation, a company is having turnover of say 365 crores, and if one day transactions have been preponed or postponed, so it will have 1 crore impact on the financial statements, and it will definitely, it may exceed your materiality figure, it may, right? So logging an error but not evaluating it. So we have identified an error, but we did not carry it forward for evaluation to the uncorrected misstatements sheet. So tracking the errors, logging the errors becomes very important. Just identifying an error and keeping it on a silo basis will not serve the purpose. We will have to accumulate it for evaluation. 3 habits of a strong substantive auditor. We have to think in direction. So as we discussed in the first session, that direction of the testing is very important. In which direction we have to test, whether we are testing for overstatement or we are testing for understatement. If we are testing for overstatement, then we can do vouching. That is, that we can pick items from the ledger and test with the supporting. But if we are testing for completeness, then we will have to do tracing. We will pick the data from source and then we will trace it to the books. So the direction of testing is extremely important. Second important aspect is we need to tie every test to an assertion. Without assertion, there is no test. If you are doing anything, if you are performing any procedure, there has to be an assertion. Keep it in mind. You have to identify the assertion first. Then finally, we have to stay professionally skeptical. We have to ask questions. We need to be inquisitive whenever we do audit. And whatever explanations we are getting from the client, that has to be corroborated with the factual data as well. Just inquiring and getting information from them may not serve purpose. That has to be further corroborated to create audit evidences. So again, just reiterating: risk assertion, nature, timing and extent, procedure, evidence, working paper, misstatement, conclusion and opinion. This whole cycle we have covered in the past 3 sessions, and you can walk both ways, because if you walk from opinion to the risk, that also is possible through that working paper. And if you want to walk the other way, that is also possible. So this is also one of the tests of a working paper, that it can be run through both the ways. If someone wants to see both ways, he will be able to see it, and experienced auditor understands this really well. So day 1 foundation we created, day 2 toolkit was there, and day 3, as promised, we have gone through one whole process, one real process. FAQs only. So I am left with 5 minutes only, so we'll be easily covering these FAQs. If the 3-way match control works, why still test details? So the answer is very simple, that only we cannot just rely on the control. That is why there may be a control risk, that even the control of the organization may be robust, but still there is a chance that certain controls were not effective when that event happened. So for that, test of details becomes a compulsion. Just relying on controls may not serve the purpose. We sampled the ledger and found nothing. Are payables complete? So as discussed, through sampling, through vouching, completeness cannot be ensured. For completeness, we need to do several other procedures of tracing, supplier reconciliation, cutoff testing, identifying unrecorded liabilities. So all those we need to do to ensure completeness. Client refuses to correct the 2.8 lakh difference, modify the opinion. No, we cannot modify the opinion because even though it is surpassing the threshold of CTT, but still it is not surpassing in accumulation the planning uh, uh, maturity threshold. Hence, we will not be able to qualify it. How do I decide vouching versus tracing on any account? So definitely, if we are looking for overstatement and for testing existence, then vouching is the right way, right tool, books to source. But if we are looking for understatement or completeness testing, then we will have to do tracing from source to the books. So direction of testing extremely important. What's the single thread linking all the 3 days? So this is the thread which is there on the screen for you. Risk assertion, NTE, nature, timing and extent, procedure, evidence, working paper, misstatement, conclusion and opinion. So this particular chain we have to keep in mind when we are preparing any workbook for any audit area. How much is sufficient appropriate evidence? So sufficient refers to the quantity and appropriate refers to the quality and appropriate refers to relevance and reliability. So whenever we have assessed there is a higher risk, then more and better evidences have to be there. In quality also, those evidences must be better, and in quantity also, it must cover sufficient population. And if the risk has been identified as or assessed as low, then definitely we can reduce our procedures accordingly. So again, it all depends on your judgment, in your professional judgment, and whatever judgment you have reached to, that has to be documented, and through documentation, we have to make it defensible. So that's it from my side. In case you have any queries, Ankita, you can see if any further queries are there from the participants.
No, that was it.
Okay, that was it. So thank you. So that's it from my end, and it was wonderful. All the 3 sessions, you have been quite patient, and I hope that I have been able to add a few insights to your existing knowledge, and I'm sure that going forward, if you apply these insights, then there is no one who can stop you from becoming a good auditor. So please keep these things in mind, and just listening to these concepts may not be enough. You will have to practice it. You will have to put in the required effort to master it. And with practical experience, practical exposure, definitely you can achieve what you want for yourself. So thank you very much from my end. So yes, Ankita, over to you.
Okay, thank you so much.
Yeah, thank you. So should I leave now?
Yes, yes.